Let's begin with WTI. Crude oil slipping for a third day. Below $58 a barrel? Can we pull up that price right now? The dollar's firming, so that's certainly one reason why that you have some pressure on oil prices.
Yeah, also reports that Iraqi exports are going to soar. We're looking at an additional 800,000 barrels a day month on month in June, which means they are nearing that record 3.75 million barrels a day. This year, the expectation was for 4 million. That was actually last year. We obviously didn't get there, but we're kind of grinding higher here. That's more supply, hence lower prices.
More supply, not necessarily the demand to back it up. All right, let's check on Brent crude, the international benchmark for oil, declining even more, falling below $63 a barrel. That's near a one-month low. There's a good analyst note from Sanford C. Bernstein. They turned bullish on Brent in the short term, predicting a rebound to $80 a barrel.
That was kind of an unbelievable call. Tell me why.
Well, they're saying there's a supply deficit at 1.5 million barrels a day, and they see a pickup in demand as we head into the second half of this year. I mean, that might be the short-term case. What's the case to be bearish over the longer term?
Well, this is, first of all, a really staggering call because many analysts are looking at higher prices in the longer term as production gets shut in and this capex globally by about $90 billion kind of bears fruit, and you're dealing with overall lower production. But in the short term, that's a pretty aggressive call, especially when you still have U.S. production still ramping up here in the U.S. We actually saw some rigs added in different parts of shale regions last week. Also, you wind up having North Dakota has about 125 wells that could be completed in June. That's according to Energy Aspects, just because they have to. You can't hang on to a lease of a well if you don't actually drill it. So they're forced to complete this well, which means that we're going to see more production. So that's why it was a really staggering short-term call from Sanford Bernstein.
It is surprising. I mean, 25% increase from current levels to get to $80 a barrel for Brent. Also, Oppenheimer's Fadel Gate upgraded a couple of refiners, Holly Frontier, Marathon Petroleum, Phillips 66, and Tesoro. Refiners have been the good news story as oil prices have collapsed through the end of last year into early this year, haven't they?
Well, yeah, because basically think of it in a very simplistic way. You buy for WTI and you sell for Brent. So as long as Brent is more expensive than WTI, refiners are pretty much making bank. They're really the area that has benefited as WTI has fallen off. However, this kind of diverges with some other shops that we've heard from. Goldman Sachs, for example, downgrading the group in April, but that was more due to, say, valuations than actual fundamental call. Something to note also, second quarter and third quarter is usually a seasonally weak period for these guys because in fall you have refinery maintenance. So they just kind of shut down. They switch over what kind of products they're making, which means that they're using less oil. So they're not really sort of making anything. The real issue, though, for the refiners is, yes, they're making a lot of products. Their refiners are awesome. Does that stay? Is there the end user demand to buy those products over the longer term? If not, that product winds up in the storage facility somewhere. Eventually, there will be potentially a glut of those products, which means that refiner margins will go down. And that's sort of the overarching risk for this group.
It sounds like a very familiar dynamic that we've been dealing with here in the energy
demand,
complex. That's right. Yeah. Just a quick check here of copper prices, too. The stronger dollar means that you're seeing a bit of a drop in copper as well. Over 2 days, it is off by 1.5%. Now staying with copper, Alex, hundreds of thousands of New Yorkers can blame copper thieves for their nightmarish commute this morning. The Metropolitan Transit Authority, the MTA, said at least 500 feet of copper cables from along the subway tracks was stolen, and that resulted in service disruption to the entire A and C train lines. You take the train, do you take the A or C lines?
I don't, but let's just take a moment. You're going to go out, you're going to rip up copper from the train tracks.
Which is dangerous because there's high voltage involved.
Yes, and then you're going to go ahead and resell it, and that sort of talks to the demand for the scrap copper, which is basically what this is going to be. Take a look at it this way. 40 pounds of copper are used in a car. 400 pounds of copper are used in the average home.
400 pounds?
400 pounds in the average home and 40 pounds in the average car.
Which is why all those houses got stripped in Detroit when people were leaving them and there were foreclosures. There are people going in, stealing the copper and trying to sell them off.
And overall, we've seen over the last first quarter, for example, is supply has been pretty low. Citi actually made the point that supply in the first quarter was the lowest since the first quarter of 2013. You had a lot of production issues. Glencore in particular, their production was down 9%. I'm not making a definite correlation between production and scrap supply, but that is definitely making somewhat of a tighter market. We've seen the higher prices over the last few weeks. Bam!
There you go.
Connecting
the dots.
That was amazing.
Connecting the dots. First 10 months of 2014, 27 copper theft incidents on the LIRR with 11 arrests. Yeah, according to the MTA.